She was not worried about that though. You marked it up. Okay. Look at what we have here. So simple. How you guys doing? Look at that. Inversion failure model again. Right into the inversion. Entry don't get no better. Shift. Since they made this 30-minute candle, let's actually see the 15-minute. Okay. There's two ways this can go for gold. There's two ways this can go for gold. Is that they've already showed us the potential direction on this when they came above these highs and just corrected and worked their way down. So either it's a very strong slow push, and what that means is, eventually they close above this candle, turning this candle into a propulsion block and retesting back in it and then still continuing, or the low of this candle gets swept at some point. So maybe we come up to here and then we take another dump, but then it leads to a bigger buy. Essentially, the direction is already shown, but you just kind of want to get yourself out of the way of the fair value gaps. So a stop would probably going to go around here. Probably can move entry up to around the 50% of this fair value gap, because right now these are the only two 30-minute fair value gaps, and neither one of them have been actually tapped into for real. So I would expect for them to eventually come into them. And then you have the last option, which is all of this is a setup for a sell, and maybe somehow this move is just a C wave to go for a big sell. But something tells me that's not what they're trying to do. Something tells me after this daily engulfing here that we're gonna work this day, but overall probably end up holding what they have going on here. But the 7 a.m. entry off the inversion failure model was solid, hitting that 382, tapping into that inversion fair value gap there. Take a look at silver. So yeah, silver is showing really bullishness in my opinion. So I definitely think that gold will also be bullish. They just kind of move on different type of time. So we'll go to the weekly. The weekly will tell us all. And essentially, from the weekly standpoint, if you take close attention to all the weekly bearish candles, they have done nothing. Okay, this is the last bearish weekly candle here, which is actually a weekly order block, and they have actually held it. We engulfed, showing us that we have a very strong willingness to go be bullish. We get an inside candle, and then this week happens to be the week where we sweep that internal liquidity. So this whole sweep here is just a setup for a continuation for buy side. This is a three-wave correction, making this whole buy setup a TS3 after a sweep of liquidity, shift of structure, three-wave correction, and then we have a daily reversal pattern playing out, simply made by a candle that sweeps, a candle that ultimately sweeps the low of that previous candle. This confirms the turtle soup essentially, because they like come below the wick, but they completely close in the opposite direction. And then the next day typically puts in the higher low. And then now we see how they displaced back up above the fair value gap that they made coming down. This is perfect in terms of an inversion failure model. You can measure it from a few different places. You can go from this high, or even the most recent high. I usually like to start off from the actual highest one because I want the bigger picture. That way I don't get caught up too low of time frame and miss out on something. So as of right now, it did tap into a regular fair value gap plus the inversion in between the 236 and 382 and bought up. So almost an algorithmic level reaction. Very nice on silver. Can it come back into these ranges? For sure. I wouldn't be surprised if somehow I was even able to make it all the way back down here again and then go. So where it is currently for me, I don't usually like them at this level. Yeah, I don't usually like, because right now this is for me like the middle of the range. I usually leave them alone around these levels personally. There has been some stuff that I've been studying that would suggest that after the market made this last bullish candle, gave off these bearish candles, and then this clear close above, that is a very strong chance that, let's say if they just pull back into this range, that we could get a continuation buy. So that's something to potentially look at. But as of right now, I don't think there's nothing to do on this currently. I don't think there's anything to do. Yeah, you just kind of want them to come back into this order block. But this is very, very bullish. You got the even high, little double top M looking pattern here. You can kind of tell that it's algorithmically looking to take out sellers, as this is the neckline. That's where they did the strong move, breaking out for those type of sellers and then taking it right back. Then perfectly, if you notice, the wick of the neckline is exactly where they hit here. It's like perfect mitigation. And now it's like they just need to take out all the sellers. The best way they can take out any continuation sellers is going to be within the premium range, which is between the 618 and 78. So what I like to usually see in these moves is once they do whatever they do down here and they push up aggressively again, I like to see them hold these ranges sharp. And then from there, it's you absolutely buy it to the external target. So this is something to consider. I don't usually trade silver. I really never trade silver, but I do think that it's worth putting on your chart, back testing, and actually watching this play out. It will teach you a lot about how the market runs, a lot of its cycles. Okay. This is Euro. Euro actually has a very nice sell after them coming below here, a tap, the pullback in into the range, and then this corrective move here, and then drop out. That's a pretty strong start to a sell for real. The daily structure confirms sell, right? So we've already had a sell off. They pulled back, taken internal. Then they dropped off hard. Okay, yeah, they're gonna correct on that sharp, hard move. Look at it. It's just bearish candle, bearish candle, bearish candle, no pullbacks. Okay, now we've got the pullback. We hit the target here, right? This was the target. This is actually the 50% of some, maybe a weekly Z fair value gap or inversion fair value gap. But remember, when they hit a key level, they usually like to accumulate and then they sweep it again. This is very standard for major moves. Just teaching you guys how to read the market. They hit the target, they'll accumulate, and then they'll sweep the target. So let's say if you believe in like quarter points, they'll hit 25,000, but then they'll do a move later that sweeps it and then reverses. That's just how the market works, guys. They hit the target and then they sweep the target. Um, engulfing, this candle actually becomes a propulsion block. It gets respected here as they close below it. And then this next bullish candle respects it. So we are now fully bearish at this point for Euro. Your first target would be this low. Now it's fairly close already, but the beautiful thing about when the market is already showing you its direction is that you really can't corner it when it does any type of move against against the overall move. There is a very sneaky TS3 here. It is one that most people have struggled with, which is a running flat. So they top out, they put in a low. This is your first pullback, your corrective move with the trend. This is your sharp move up against the trend. Remember, every TS3, this last wave can be used as an inversion failure model. You measure this leg up, and literally when they slide below the 236 and shift structure, you can just put a pending at the 236 for them to come back and tap it, and you're done. There's nothing left for you to do but to catch a massive trade. Literally, I've shown this on multiple live sessions. It's a real thing. Just got to be patient. This don't happen every day or all the time on a big level. This is GG on this trade. Yeah, so we just got an obvious strong 4-hour close. So now during this time, they're going to be, they're doing this little pullback, and it can be deep. It's one thing about TS3s is that they do like to give these deep pullbacks against the trend a lot of times. And I anticipate those. And the best way to figure out where it probably will go is to just measure that whole leg. And you line up what makes sense. So I would say somewhere in here would be like the max of where I would expect for it to probably go and still be valid for a sell. It may not come that deep, but somewhere in here, then I would expect a sharp continuation down. You have every right to believe in a sharp continuation down until they literally can close above this. You're still good for sales. But I know most of us don't usually trade Euro, so obviously let's get back to the instruments that we usually trade very quickly. Real quick, I did want to show this platinum. Obviously, y'all saw me take this sell on a live session from Tuesday. Boom, played out perfectly. This is also another TS3 that played out. I actually drew on the live session this exact thing. I drew that it would come here, and y'all see where it came. and that it will actually, push up from here. Why? Well, the higher time frame trade is actually still bullish. Everything is actually still bullish, and that this whole sweep is actually part of all of a inversion failure model. So look at where they're responding to. Right, yeah, they came below the 236, and that's fine. There's an order block here that was untouched. They tapped into it. Now they've created a inversion fair value gap on their way down on the 4 hour. Guess what? They've already pushed up and they filled it. Then after they filled it, they pulled back into the first little fair value gap here. It's also in alignment with that, the low of that fair value gap or Z fair value gap, whatever the yellow is. So boom, really great confluence. They completely respect the 236. We're still in a discount. This is actually a decent trade or just a bias in general of just somewhere to keep going. Would love if this could pull back, and this would be a continuation higher and higher for the next few days or even few weeks. As like I said, the trend is bullish. If you look to the left, the trend is bullish. This is finally that first sharp sweep against the trend, and then we accumulated for literally like 2 weeks. We just caught the last swipe against the accumulation. Now, I don't want to jump to say it's the last swipe. Sometimes they double swipe, but they had already did these two little lows over here. I really do believe that the strong candle close one is the last one. Like I believe that they will not retouch this low. That's what I believe. I don't think there's no reason for them to. However, they can always, come close to it. That's always possible. But this is very important to be aware of when it comes down to prediction and anticipation, and just even understanding how to use the concepts that I'm teaching you guys. They all flow together. So we're inside of a large potential inversion failure model, but yes, against it, inside of this accumulation, I took a TS3 down to the low, understanding that the accumulation that was taking place here was incomplete. It had set up perfectly for a sell side sweep. We have to remember just the basic principles of the market, which is essentially we got even highs here. They swept them, they shifted structure, and they went into a three-wave correction. Yeah, I know I'm in an inversion failure model, but if you're just trying to buy this just because it's inside of the 382 and 236, you're missing the picture. Right? There's a whole untapped order block here. Both things can be right. You can literally catch a major sell while still being inside of a major buy. Right. So you gotta keep your mind sharp on what's currently happening and then on what's happening overall. Okay. Yes, sir. Yes, sir. Got you. We're working our way up DXY. So remember, I was looking at Euro and showing that Euro was more than likely still continuing on the bearishness. Something that you always want to check when you're trading the currency pairs is dollar, and making sure the dollar is kind of on the same page. Doesn't always have to be, but it is important. So we had some bullishness here. We got a pull back into a daily fair value gap plus inversion fair value gap. They respected it. We had an engulfing of that entire situation. So when they closed above this, again with the bullish candle, that showed us that the direction of the market is likely has more bullishness in it. Now, it is kind of tough because they really have not closed above here. So it is a little fishy, but this is the weekly. We can take a look at the daily and see if the daily has done work. And yes, the daily has done work. On the daily, when they came above here, above these levels, that was it. That's what they needed to show that we could have a lot more bullishness. Back to the weekly, just understand the weekly candles. These 2 weeks are inside candles of this large bullish week. Understand that. We're literally talking about 2 inside candles that do not even violate the most previous bearish candle, which is actually now a bullish order block as it tapped into and respected the fair value gap and then got engulfed. So it's actually a propulsion block. It's a very strong propulsion block. Well, many times what I would do is I end up just highlighting the whole candle And essentially any low, low areas within the candle below the 50%, I'm interested in buying. That's just how it usually works. But I'll take this off for the sake of our eyes. And we'll take off this fib too. So then boom, now you wait for the daily to change. What does the daily change look like? So first we're going to look at some daily lows. Market sweeps those lows. Boom, 2 candle combo. Cool. It gets engulfed here. Cool. The next candle drops and it's bearish, hits the opening price of the previous day's candle. Expected, very common. However, at the end of the day, we're coming off of engulfing. All we're waiting for now is for this candle right here to be closed back above. They close back above it here. Any discounts from after that point, especially now this candle is a propulsion block, you can buy off of that. If you pay close attention, there is a daily volume imbalance. Daily volume imbalance right here. This gives you an opportunity on the lower time frame, at least the 1 hour. So we'll drop down to the 4-hour first. Okay, so market's obviously making an uptrend. High, higher low. This is not a higher high, but we put in a higher low. Then we get a higher high, and then they put in a higher low. The higher low comes right into an inversion fair value gap plus regular fair value gap. That is called a unicorn. These are very exact opportunities in the market. Then we're on the 4-hour. What are we doing? We're still waiting for the market to re-show us where it's going. Okay, so here, where's the last 4-hour order block? Okay, this was the candle that swept into that. All right, now we're waiting for them to close above that candle. They close above it here officially. All right, cool. Yeah, they push up. Maybe you're very anxious. You think this is going. It's okay, because what happens is, guys, usually the market does not go until they send a bearish candle into the bearish candle. If it's a bullish order block, then they're usually not going until they send a bullish order block a bullish candle into the order block. So you see how there's a bearish candle. You see how just before the big takeoff happens just now, there's a bearish candle that comes in it, but respects it. It drops the wick below it, but the bodies don't come into it. That's a very strong sign. So now, 1 hour. The 1 hour. How do you actually catch this bad boy? Well, I've taught you guys already inversion Fourier model. From this high to this low, we are going to be looking for that entry inside of the 382 and the 236. The last drop off is here. They push up here. They accumulate here. This push up is also still a part of the accumulation, and this push down is actually still part of the accumulation. I know it's tough. I know it probably makes no sense, but this is a type of pattern. It's called a expanded flat, and it's literally meant to F people up, okay? It's literally designed to do that. However, if you're paying very close attention, there is a fair value gap right here, right there, inside, right in between the 236 and 382, after them sweeping all the internal liquidity that they made while going up, right? Because if you pay close attention, as they were going up, they never made any lower lows. They never made none. That's called low resistance liquidity. It's meant to be swept. However, the market is, remember, the whole market is bullish, and they just created an order block after they closed above this candle. So if you're very sharp, you can put a pending inside of this fair value gap with a stop below the low. But if you're super sharp, then at least the 15-minute, you can get in an entry off the change of order flow. So bearish candle, we get a bullish candle, we get this bearish candle here. And if you want, you can, as soon as this little bearish candle gets engulfed, you can just blind enter right here. That is a possibility. And just stop below this candle. Now, if you want to catch it during the actual New York session, well, there we go. 8:30 news spikes it right into that same level right? This is why I don't sometimes trade the pattern. I like to trade the times because literally the times do all the work for you. It sucks sometimes to enter this, be up, and then have to see them come all the way back. That's why if you trade the times in the news, oh, they'll go to the extent of where they need to go during that point. But this is also flawless. Volume imbalance, opportunity, sweeping the internal liquidity, stop, you can go here, and then you're obviously targeting back above the highs. We're already past 1 to 6, and that is DXY, right? Which is also pushing, not pushing, but it works well with EU, so they're pushing down. Next, I think we touched on gold a little bit. We don't need to go over that anymore. Yes. ES. So yesterday, after they did the big drop, they did do the sharp pullbacks in the PM session after the FOMC news. Due to that fact, something told me today is probably not the best trading day. And I thought that it was going to be, but then when I realized God was trying to make me busy today, I was like, yeah, it's probably not the best trading day to be up on NQ. I have a feeling that after the big sell off, that they would be a little bit complicated today. So let's take a look at where the market is. And we also got to pay attention to what it's done in the past. So in the past, we had this major sweep after some major news releases. Then they worked their way up, made higher highs. What I'm looking at now is if we have really broken down to make a sell, we did just come down to the 50%, okay? And look at how they responded. It pulled the skirt right up. So we're in the middle of the range here. Now, above the 50%, which is the 382, 236, we have beautiful levels, which are in a premium. And then there's also the first daily fair value gap. It's gonna be very important, regardless of whether they push right through it or regardless of whether they come into it and respect it. It's gonna end up being important. So due to that fact, and also we can highlight this too, this would be very important as well, the inversion daily fair value gap. These are levels that if you trade these assets and you don't have these two things prepared, you're not even doing analysis, to be quite frank, right? You're not doing analysis. These might be the most important things from just trying to trade these that you should have on your charts automatically. Template, buy side. And it's not just because, oh, as soon as they get in there, it's automatic sell. It's just you need to have them so you can read how the market responds to these levels. They are going to be the most important levels. So we're in the middle of this week. And the thing about this being the first week and it's not yet closed is that it can be very tempting. Right? It's different if this week was already closed and already engulfed. Then you kind of just anticipate that at some point, in the next week, we probably put in a high and then maybe we end up going lower. This week is still live, right? It's still live. So there could be still a big swing that tests everybody out. And based on how the market is responding right now, I wouldn't be surprised if that was coming up. I always felt that just even the way that they obviously were setting up to come down, I didn't love it, and it was for good reason. So look at how the market's currently responding. If you are sharp, you would have realized this was a perfect inversion failure model. From this high to this low, they already did a play yesterday. I sent that from NQ, but now today they did the perfect 236. Once again, there ain't no lack in what it is that I'm teaching or showing. For me, for you guys, for everybody, it genuinely is just, are you patient enough to wait for these things to actually happen? Or do you always got to be involved in something? Because it's going to play out. I literally only teach models that happen consistently and have a high probability and win rate. But obviously, you do have to be patient. But this is also a Unicorn, we got the inversion plus regular fair value gap, which means we could have predicted the exact opportunity to the T with the stop out of the way and be aiming for, whatever the targets, 1 to 3, 1 to 4. It already probably hit 1 to 3 just now. And that would have been GG. Okay. That's from this high to the low. Very just sharp move. The way that they were moving was not the move of just a regular continuation. They moved like a stop hunt. What leads me to believe is this, guys, and this is a little complicated, but it leads me to believe that in some form or fashion, I can't, it's kind of tougher probably on ES, but something makes me believe that this is kind of like a B wave down. There's something about this is a B wave. Because B waves do like to end, like they'll accumulate down, and then at the end, they will send something sharp. And then what comes after that is a sharp move against the trend. And then they'll obviously continue. So I would love if it did exactly what I just showed. This is where the alignment of everything in the market lines up, the fair value gap, the daily inversion, the structural points, etc. I don't know. But like I said, we just hit the 50%, and it would make sense for them to come all the way back and tap the 236 as they just kind of left it behind. But we shall see. But I think it was set up for me to not really be much of a trader today, as initially that probably would have been tough to reconcile with trading against these strong bearish moves, anticipating right off the rip these buys, especially before 10 a.m. This is another reason why I chose, what, let's hop on at 10 a.m. because look at what we had before 10 a.m. This would not have been fun. This was 8:30 to 9:45. So yeah, that's not fun. So it wasn't until after 10 a.m. Boom, they put in a wick to retap the 236 and then ran up. And yeah, I'll be damned if they don't eventually tap these highs. Once again, this is a type of setup I'm very familiar with. Normally, it's around, okay, 10:30 just hit. Normally, this should do some type of shallow correction. If it wants to be really deep, that's fine. Maybe it can't come all the way to the 50. But overall, I would expect for this to work its way up. So that's ES for right now. I don't really believe in this dropping all the way to continue dropping. But I can believe if we were to try to spike deep into this fair value gap, because really it'll stay valid as long as it don't completely engulf the bearish candle. But overall, I believe that this is still bullish. This is a very bullish type of setup. YM. Okay, so YM, you already know my song about YM. I've been screaming, it is definitely not bearish, right? So the interesting thing is what is YM willing to do while NQ and ES push up? What is it willing to do? Is it set up or ready to do anything particular? Well, I would say that it pretty much is. Remember, it swept this internal liquidity on the weekly, the double tap. This is actually a ready to go setup, by the way. So this type of breakout, tap into a fair value gap, push up, then re-tap into the fair value gap, but do not end up going down. And then they've already made a slightly higher high. I would not be surprised, and y'all will be like, yo, when this happens, you're gonna be like, yo, that's insane. There's gonna come a day between this week and next week where YM is going to just end up taking off, and it will end up probably being above these highs. But NQ and ES probably won't be doing the same thing at all. It's probably gonna relate to some company on the US 30 markets or whatever, but expect that. Okay. Expect that. Look at all this accumulation. This is not a setup for a reversal. This is the daily. We are now actually doing a first tap into a daily fair value gap. Okay. So all that accumulation after taking the high, tap into the daily fair value gap. Also, if you go inversion failure model, they're tapping into that 786, 7%, 61.8 areas. They will not come below this wick. That's very unlikely, I would expect. I would very much expect them not to come below this wick, which, I mean, they're basically showing that now. We are looking for these even highs to be snatched by YM. If there was a trade that I would say to focus on for the rest of the week, it would probably be YM based on what it's currently doing. Now, it's very fresh off the sweep, but there are days where you can get that sweep from one side and they will literally be back at the high in that same day. It is very possible. It is not something that you have to doubt. Very possible. A key thing about this whole situation too, this was a fair value gap, but it already got swept through. Best believe they don't need to slow down at all next time they come here because it's already been swept through. They will literally just kill it. From the 4 hour, from here, we can go Z fair value gap. Believe it or not, as elite trader, you just literally can go like this. Matter of fact, and then below 50% of this wick. This is an elite pending level trade that you could take on this if you didn't want to watch it. But this potentially could take some time. From the 1 hour, like I said, we're still in the middle of it all. It's still fresh. They did just give a 30-minute engulfing close, clear, shift to structure. Something tells me maybe YM can go crazy today. Something tells me that they're gonna kind of wait for tomorrow. Something tells me that, and that they're gonna, I don't know, something like that between today and tomorrow. So it's fresh tap into a fair value gap. But this right here is not at a level where you get active. It just isn't. Any type of situation like this, you have to treat it like a TS3. So essentially, you're gonna let it and eventually let it do its shallow pullback, whatever type of complex correction is gonna do, for the B wave, and then you're anticipating. If you really want to time it right, then you're anticipating the sharp move against the trend that's going to look like a sell-off, but it's going to qualify for everything that we look for, and then it's going to take off. That is the timing, for these trades. And there's a bunch of ways that they can do it. I drew out during the masterclass all the different, corrective variations. One of those are likely how they're going to end up playing out. But I very much see this setup on YM from the daily and weekly standpoint as being pretty damn bullish, unless they can maybe somehow continue this day and actually close inside of this fair value gap. Then I can change my mind, and I wouldn't mind changing my mind. I wouldn't mind if they, let's say, just to show you guys that there are other options. There's always the exception. Say they, you can come where they just came, and overall they just do this and start to work their way back down. It's possible. That's why I say the buy isn't ready until they do the TS3. Just because the market hit a low and push up hard doesn't mean that it's time to buy it. There's a way these things happen and develop. But all right, last one, right? NQ. We go to a fresh chart. NQ, I can't, I have to make sure that I don't confuse NQ, ES, and YM as that they all have to do the same thing, because they really don't. And sometimes they really can confuse you if you start to try to align them too much, where they really will all do something different. NQ is way more bearish than both ES and YM. Way more bearish. like just for starters on the daily, they have definitely closed inside of this previous bearish candle. Like they actually closed inside of it. I mean, technically, even today, they've retested the high of it. That's actually a scary sign for, usually like potential sell type patterns. Now, like I said, I'm not really calling this trade. Like I said, something told me after what happened yesterday, today is probably not a trading day. So we are inside of a range that only took like 3-4 hours to make. Okay. Literally, we're inside of 1 4-hour candle. And we've been there all day today and all the whole yesterday's half. It is not for NQ, it's not really your ideal trading day. We have some very interesting relative even lows made here. And then we have the first fair value gap there. So yeah, I don't know what's going to happen in this range. Like I said, we're inside of a range. So this is usually an area where you're not really trying to get too active, but I could see how they could work their way here and then work their way back up and then go for a big sell. This is a very common type of pattern that happens off of sharp sell-offs like this. So it's essentially a 1, 2, 3 pattern. You sharp move up, corrective move down, sharp move to take out the corrective move, plus, a little bonus high that they target and then continue. But at the end of the day, I'm not trying to do too much prediction, but I do want to, you know, show how the market can develop and like the intentions. Not everything is just one directional. It's like it's this little play to do this little play to do this little play, and then they work their way all the way back up to the bigger play. But yeah, I think what I just drew out might really be the wave. What I just drew out might really be the wave because this ain't no this slide that they're doing right now is not nothing to play with. It is not nothing to play with at all. I don't like none of it. So I guess I'll be out of the trades. But yeah, that was nothing to play with for sure. So this is your breaker. We have a Blake breaker plus fair value gap here in the event that somehow maybe they work their way back up into here. But the way they're dropping is, I mean, they obviously went up. Okay, so just to show you guys the type of price action I'm talking about, this is what you call low resistance liquidity. Look at the curve. Every low was just preceded by higher ones easily. Okay, it's just getting higher. What that usually creates in the market is what we call low resistance liquidity. It creates this area where the market just can easily flow right back through it. These are very staple of C waves. C waves is usually a last internal sweep of a trend before they go in, the other direction. So what you'll usually get before these sharp one-sided moves is usually some type of move that is correctively moving. So you guys see how this price action is very corrective, lots of pullbacks, internal sweeps, right? Internal sweeps before the drop off. And then this completely different type of behavior. This is something that you have to learn in the market. You have to know and understand this and to be high level. To be able
It's also the monthly open at midnight they went up to up there where you marked off.
Like up here.
Around the right above the 23.6. That order block from the high, that's the monthly open at midnight price as well.
Yeah, they cooking up something for sure here. They cooking up something for sure. Where's my midnight candle? indicator. I feel like I lost it, and I haven't been able to find the one that I use, but I'll mark it off manually if I can't find it. Because these other indicators be so ass. This one is time is off by an hour. Where's the settings? All right, so I can't even use this one. But yeah, midnight for anybody that doesn't know is just 00, 0000. So this is your midnight open. So this happened to be a really interesting sell opportunity, really sharp internal sweep of liquidity. And like I said, because of the fact that the move worked its way up so sharply without any pullbacks, it never tested any order blocks. It did like it literally did no work. When they do that and they get to a higher time frame order block, fair value gap, clear some even highs, a lot of times, yes, they'll shift like right here. And then just all they needed to do is this little tap into the breaker and they just kept dropping. But this is not what you want to build your trading off of. What you want to build trading off of is when they can come back into this and then reform. I don't know what I just did there, but yeah, I'll get it. And then, even this, then now this is the most elite entry here. So basically they confirmed it, they went, but then there's this situation where when they went, they made a fair value gap. So then they rebalanced the fair value gap, and now you got the trade of the century. And now you catching literally a 1 to 20,
In there.
How does this become a 1 to 20? All right, 1 to 10, whatever. But that's an example. Yeah, you could take this. Like I said, personally, I'm not a biggest fan of today, but that's takeable. I'm looking for something. Let's go higher. There's something here that we need to. Okay, so there goes the other thing. So the 4 hour fair value gap right here, very key, very key. So when you go down to a lower time frame, which you also see, this is where all the confluences just come together. So that 4 hour fair value gap, you see literally the candles right here, the bodies close on the extremity of the 4 hour fair value gap.
It's like that on every time frame too.
Yeah, I love it. And so that's my number one secret, I would say, to my trading is that I have 4 hour fair value gaps prepped around. And like I said, I use the lows 50% and tops, and I will get different plays at different times from those areas combined with everything that I already know and use, obviously TS3, inversion failure model, etc., all the other stuff that I may know. It just makes for elite opportunity, in the market. But you see how the market has been very sensitive, at these levels. But yeah, this is inside this range, that's inside this range, that's inside this range, that's inside a bigger range right now. So like I said, when you're like that, you want to definitely trade from extremities or after sweeps of highs and lows. We definitely have two immediate highs and lows that eventually will have to get swept because the market will not stay in this range forever. So either you are coming to a decision to target one of these highs or lows, and at some point they're more than likely sweep both highs and lows, you know what I'm saying? More than likely. But that's kind of where you are. Now, we did just get one point where they came to an extreme. So it would make sense to probably aim for this low, but the market isn't always that simple. It really isn't. But I think I'm pretty much done for today. I think I cover all bases, but I don't know. Intuition told me today's probably not my day to press buttons. So I'm gonna listen to that. And from what I'm seeing, unless I showed up like during early, right? There was some trades early. Like unless I showed up during London, there wasn't gonna be too much for me right now. But London, I'm not gonna lie, these London sales was not bad from these highs. Does anybody have any questions about all the stuff that I went over? I know I went over a lot of different concepts, a lot of different uh things to determine bias and reading daily price action. But those are the number one things that come before hopping on the 15-minute or the 1 hour and trying to find an inversion failure model. You actually need to know where you are overall. Higher time frame comes way before lower time frame, way before. And then you start working your way from top to down. And you find the opportunities where you can corner the markets. Not gonna lie, that Euro sell. It's about to finally hit that low. I don't know why I didn't put a little sell side here. All right, so I'm guessing there are no questions. So like I said, I'm gonna leave it at that. Am I bugging or was there news tomorrow? Why FX book? I think there's not news tomorrow, actually. No, it is. Tomorrow has 10 a.m. news. Fed Chair Powell speech. Mav, does that mean you can't trade on Friday?
Yup, that's exactly what it means. You're gonna have to watch that old man speak.
Hold on. How long his speeches be?
We don't know. Sometimes he speaks for 10 minutes, sometimes he speaks for an hour. Sometimes they question him. I don't know if that includes testimonies where they're questioning him, but that's the reason that I'm
Yeah, bro. Hit up
focusing on today.
hit up support because that's egregious. That's egregious. So I'm
I
guessing
don't
Forex pairs must be moving something nice right now because literally, yeah, because DXY has that crazy buy setup. Look at that little sweep. Oh my God. This is what everybody in the Forex charts been going hype about this week for. Seen a bunch of GU charts. It's just out here giving away points at this. I mean, pips at this point. Jesus Christ. Look at this trend. I mean, it's just so strong. Oh my God. It's a giant TS3 that's already shifted structure. This is OD, Mav. Do you see this joint, bro? This is like oh my God. Is US dollar about to really go crazy? Y'all see this? Am I the only person that sees this?
see it, my boy.
Major sweep, perfect accumulation and manipulation for the break back in, the real sweep, drop right down, shift structure, pointless pullback. Now, this is not really corrective with the trend. So this actually makes me believe that this might actually end up being a little bit more complex than we think. They really turn into this, especially since they kind of smooth those highs out so crazy. But overall, though, this is a setup for a major sell. This first week is still alive, though. Weekly fair value gap, breaker block. Jesus. Folks that was trading Forex is going crazy right now. The breakout of the secondary candle with the retest to it. Oh my God. But I'm not gonna lie. This all looked kind of funny to me. So we'll see. All right, guys. We'll catch y'all. I guess I can't even trade tomorrow, supposedly, based on the broker the prop firm that I'm with. talking about we can't trade not only at the news, but even until the speech is over. That's crazy. I guess we'll be tapping in like 10:30 on a Friday. Or just trading before. I don't know. All right, guys. I see y'all probably in the chat. Let's get it. Peace.